All right, guys, so thank you for being patient. You're going to fill in the notes today for section 2.3, analyzing how transactions affect owners' equity accounts. So we're going to analyze transactions for operating a business into debit and credit parts, remembering that when we analyze a transaction, we're going to first take a look at which two accounts are affected. How is each account classified? So is that account an asset, a liability, or owner's equity? And then how is each classification changed? Is it increasing or decreasing? And how is each amount entered into the accounts? Is it a debit or a credit? So looking at the transaction, received cash from sales. So on January 10th, you received cash from sales of $1,100. What two accounts were affected? Your cash account and your sales account. Because they are on opposite sides of the accounting equation, then they both are going to be going in the same direction. So in this case, you're going to debit your cash account because that is increasing by $1,100, and you increased your sales, so you're going to increase your credit side of your sales account. So as we go through this, cash and sales are affected. Cash is an asset. Sale is a revenue account under owner's equity. Your assets are increased. Your owner's equity is increased. Cash is debited, and sale is credited. Next, we're going to take a look at sold services on account. Once again, when you sell services on account, that means you're letting someone purchase something to pay you back at a later date. So they're charging it to you, and you are allowing them to pay back at another time. So in this transaction on January 12th, you sold services on account to Main Street Services. So once again, first thing you're going to say is, what accounts are affected? It's your accounts receivable from Main Street Services and sales. Next, you're going to ask how each account is classified. Your accounts receivable is an asset. Your sales, once again, is an account under owner's equity. How is it going to change? Your accounts receivable is increasing, so you will debit your accounts receivable, and you will increase your credit, so owner's equity is increased. Accounts receivable Main Street received services is debited, and sales are credited. So once again, when they're on opposite side of the equation, they both go in the same direction. Debit side increases for assets, credit side increases for owner's equity. Next type of transaction is you're paying cash for an expense. So on January 12th, you paid cash for communications bill for a cell phone and internet service of $80. So once again, when you first take a look at this, you need to decide which accounts are affected. Well, you're looking at your cash account and you're looking at communications expense, which is a account under owner's equity. So communications expense and cash are affected. Cash is an asset. Owner's equity is the category for communications expense. Your asset decreases and your expenses are increased. Even though the owner's equity is decreasing, okay, you're decreasing it on the debit side, but because it is a counter or contra account to your owner's equity, that decrease in your owner's equity says I have an increase in my communications expenses. So you debit your communications expense. All right, next transaction, receiving cash on account. So you received cash on account from Main Street Services for $200. In this case, we're going to be taking a look at what accounts are affected. We have our cash account and we have our accounts receivable. Both of these are categorized as assets. So cash and accounts receivable Main Street Services are assets. Next thing you're going to say is, how is the category affected? Because your assets are increasing, you got more cash in, you're going to increase your assets. And your accounts receivable is decreasing. So you're going to debit your cash and you're going to credit your accounts receivable. When they're on the same side of the equation, you have to have them equal to one another, so they have to go in opposite directions, debit and a credit. Okay, next transaction, paid cash to owner for personal use. In this case, we've got January 16th, Michael Delgado withdrew equity in the form of cash. So that means he's drawing out of his account. So the first thing we need to take a look at is what accounts are affected, my drawing account and my cash account. What categories do each of them fall in? My cash is an asset, and my Michael Delgado's drawing is an owner's equity account. How are these accounts affected? My assets are decreasing because I'm taking cash out of my assets. And your owner equity is decreased because you're withdrawing out of your Delgado account. So you're increasing the amount of withdrawals that you have in your drawing account. Your cash is credited and your drawing is debited. Once again, you always have a debit and a credit transaction in every transaction. So, which two accounts are affected when a business pays cash for a cell phone? You are correct if you said communications expense and cash. Well, what categories do they both fall in? Well, we know communications expense is a owner's equity account, and that falls under expense, and your cash is an asset account. Which two accounts are affected when a business sells services on account? You need to be thinking of accounts receivable and sales. You have a sale, so that affects your owner's equity, and your accounts receivable is an asset. Which two accounts are affected when a business receives cash on account? Cash and accounts receivable, both which are assets. Is the drawing account increased on the debit side or the credit side? Good question. What category does it fall into? It's an owner's equity, but is a drawing increasing my owner's equity or is it decreasing my owner's equity? Debit, because withdrawals decrease your owner's equity. Are revenue accounts increased on the debit side or the credit side? Well, if you're adding revenue into your account, you're increasing your owner's equity, so you're going to credit your revenue. Now pause for a minute, grab your workbook and your textbook, and we're going to do the 2.3 work together. Okay, so on page 49 in your textbook, we're going to look at the 2.3 work together, and we have to take a look at analyzing revenue, expenses, and withdrawal transactions into debit and credit parts. So we are going to first prepare 2 T accounts for each transaction, and on each T account, we're going to write the account title of one of the accounts affected by each transaction, and then write the debit or credit amount at each of the T accounts to show the transaction's effect. So on March 11th, you sold services on account to Jones Erickson for $125. So what 2 accounts are affected? It should be your accounts receivable and your sales. Next, you have to say how much are they going to be affected and how is each account classified. So your accounts receivable is an asset and your sales is an owner's equity. They're both increasing. So you will do your 125 on the debit for accounts receivable, and you're going to credit your 125 to sales. Our next transaction is received cash from sales, $250. What 2 accounts were affected? You should say your cash and your sales. How is each account classified? Cash is an asset, sales is owner's equity. You have to determine how is each classification changed. Are they increasing? Are they decreasing? In this case, you received cash, so it is increasing. So you're going to debit $260 and you're going to credit your sales $260. Our next transaction. Paid cash for telephone bill, $54. So what two accounts are affected? My utilities expense, and I got to pay for it with my cash. Well, in this case, my cash is decreasing because I'm paying a bill, so I have to credit it, which means I'm going to debit my utilities expense because my utility expenses are increasing. Okay, next transaction. Received cash on account from Johannes Erickson for $125. So what two accounts are affected? My cash and my accounts receivable. How is each account classified? They're both assets, so they're going to go in opposite directions. How is each classification changed? They're both increasing because I received cash and I increased my accounts receivable. So I'm going to debit my cash and I'm going to credit my accounts receivable. And then on the last transaction, you paid cash to owner for withdrawal of equity of $200. What two accounts are affected? My Jensen drawing and my cash. How are they classified? My drawing is an owner's equity. My cash is an asset. However, my drawing reduces the amount of owner's equity I have, so I'm going to show the increase side on the debit, and I'm going to decrease my cash on a credit. So that's how we do our 2.3 work together. You have on your own an application for homework.